Assalamu alaikum and welcome to the Halal Times YouTube channel. Today we brought to you another episode from the Halal Times. I hope you will like it. And today's discussion is especially important for those people who want to make halal investment. But apart from doing that, they also care about environment, about governance, about sovereignty. So basically, they care about ESG standards and goals. So let's discuss a very important topic. This topic is, of course, I know I have to confess that this topic is not for everyone, but it is very important for the Muslim community who are interested in doing halal investment, but having ESG standards and goals in their minds. They're very keen about these issues. So let's discuss this issue, which is very important for all of us. Today's topic is halal investing compatible with ESG goals? Every now and then we come across articles and upon articles and upon articles about news and so many things popping up in the global media about this very important topic. Recently what happened is Pricewaterhouse recently noted that understanding the similarities between ESG and Islamic finance investment principles holds the key to the opportunity for banks and asset managers in the Middle East. I would like to add that it's not just the case with the investors in the Middle East, but everywhere, almost everywhere, it is related to the places where Muslims are there, where Muslims want to make investment. Not only in the Middle East, but also Southeast Asia and so many other countries of the world as well, where Muslims are in a sizable majority or even in minority, and they are interested in making halal investments. Of course, this topic is important for them all. The topic which we're going to discuss today is basically, it was published in the Newsweek, and it addresses the issue of Islamic finance and its compatibility with ESG goals and the seemingly countless business opportunities it offers in the Middle East and other parts of the world. The global Islamic finance market could expand dramatically. We tend to think that if its goals are combined with those of environmental, social and governance funds, which I just mentioned in the beginning. It's called ESG, environmental, social and governance funds. The latter funds have about $35 trillion under management globally these days, and that figure is projected to hit 53 trillion. I'm not talking about billions, but $53 trillion by 2025, just in 3 years time. Currently it's already hit $35 trillion, and in 3 years time it will go up to 53. It's a big number, and we got to be very careful. And that investment accounts for 1/3 of all investable assets in the world. So in contrast, what is happening is Sharia funds, which are those that invest according to the ethical and religious principles prescribed in the Quran and in Sharia, they have grown 300% over the past decades, but still only amount to about $200 billion in assets. What a strange thing. On the one hand, we're talking about $35 trillion as of today, but on the other hand, we're just giving the number which is equal to $200 billion only. And of course, as you know, there are $1,000 billion in $1 trillion. So we are talking about a very, very, very small fragment of the money which Muslim investors put into ESG investments. So according to the Bahrain-based General Council for Islamic Banks and Financial Institutions, this number is very low, and there is a lot of room for improvement. There is a lot of room for growth. This growth could be vastly accelerated if Islamic investment funds adopted common global regulatory and legal frameworks, and adopting these proposed standards would also benefit ESG funds if they begin practicing the investing criteria specified in Sharia law. According to Pricewaterhouse and one other firm called ACCA, these Islamic principles, what are these Islamic principles which we got to keep in mind while we do investment? The idea is that the wealth must be generated from legitimate trade and asset-based investment. This means the use of money to make money is expressly forbidden. Another thing which they have pointed out is that investments should produce social and ethical benefits for the people that are beyond pure return. Profit, of course, can be an important motive and for which you make an investment, but it should not be merely profits or profit only, but you should also invest your hard-earned money to make social and ethical impact in the society which you're living in. Risk should also be shared among investors and businesses. These are the basic principles which this accounting firm is talking about as far as the Sharia principles are concerned. All haram activities, including those to the environment, should be avoided at all costs. If ESG and funds that track Islamic law had a common foundation, they could impact the business operations of global firms, and especially those firms operating in conservative nations in the Middle East, Southeast Asia, and a lot of other countries as well, according to financial experts. This could also have a huge political impact on the 2.0 billion Muslims globally. This figure represents approximately a quarter of the world's population. As you know, recently 8 billion individual was born. So we are about 1/4 of the whole world. A quarter of the whole world's population Muslims are. Islamic finance and ESG investing are complementary investment approaches, sharing significant common ground, such as being a good steward to society and the environment. It was noted by a recent white paper by BNY Mellon. Both offer products that appeal to Muslim and non-Muslim investors alike and hold strong practices and policies that each can learn from the other. So now the question is how to combine ESG and Islamic finance principles. That's an important question. I would like to address this very important issue. A recent study found that over 1/3 of financial professionals who practice Islamic finance said they expect to see a large increase in the number of Islamic funds that offer ESG and Islamic Sharia compliance over the next 2 years, according to a study done by Maybank Islamic Berhad in Malaysia. That study also found that 73% is a big number. 73% of professionals working for financial firms view the demand for ESG products as not being met properly because they do not meet the standards required under Sharia law. However, if Sharia law and ESG criteria were combined in new products, we need to have new financial products where we could combine Sharia law and ESG criteria. The sector could see the growth rate expand significantly. And this is especially true in North America, where ESG funds have exploded in popularity in the past few years. Islamic finance is indeed growing strongly, but we believe the growth could be further boosted if it was able to offer Sharia and ESG compliant funds globally, not just in one specific market or one specific region, but globally. This study shows that potential demand for such funds would rise from the traditional as well as from the non-Muslim investors. Maybank Islamic CEO Dr. Muhammad Rafiq Berikan said in a press release recently that there is a lot of possibility that Muslims, not only Muslims but also non-Muslim investors would also be interested in seeing ESG standards and Sharia principles combined. You know, what is the problem? Why the funds are not growing rapidly? ESG funds in Sharia, in Islamic and Halal investing, they are not growing combined. Why? What the reason is? You know, there is a lack of global standards which impedes growth. While the number of funds and assets under management have increased among Islamic investors, Shakib Saklain, founder and CEO of IslamicMarkets.com, said the Islamic finance sector lacks a global regulatory and legal framework. So that's why this is one of the important reasons for which there is not that much growth that we should have expected. If standardized framework were adopted by the Islamic financial community globally, it was noted by the Maybank study that 72% of those questioned believe that the combination of Sharia and ESG compliant would boost investment demand from non-Muslims more than from Muslims. So this view was earlier stated by Abdullah Belatic, Secretary General of the Islamic Financial Services Industry, IFSI, in a January 2022 report. He said that with the growing market for ESG investing, Islamic funds possess a huge growth potential and are expected to play a prominent role in the Islamic financial industry in the coming years. And this is especially true if sustainability criteria were used. Another problem which we see is basically Sharia funds, they lag compared to ESG funds. Why? That is something very strange, which is beyond my imagination as to why it is happening like that. Despite the overlap in ESG and Sharia investing principles, assets under management in Sharia funds have not kept pace with the growth in ESG funds. Why there is a dichotomy? According to one report given by Schroeder, there is one possible explanation for this divergence. Explanation is basically the current limited range of Sharia compliant investment products fails to meet Muslim investors' broader preferences. In addition to Sharia compliance alone, for example, the lack of an explicit focus on sustainability within the majority of Sharia equity funds could be pushing investors who are motivated by ESG considerations to the traditional sustainability arena as opposed to the Sharia arena. The report also noted that adding sustainability criteria to a Sharia portfolio recognizes that sustainability principles are at the core of Islamic beliefs, which is a fact that has failed to receive the prominence it deserves among traditional Sharia investment products. What a pity. A different viewpoint was offered by Monem Salam, who is the executive vice president and portfolio manager of Saturna Capital. He said that when it comes to ESG standards, we in the world of Sharia investing are in a different place. That's a problem. Maybe we don't have a clear understanding of what the similarities are, where they converge with each other. So that's why maybe we don't focus so much to the ESG goals. There are no centuries old guidelines to steer standardization. The sector could borrow part of the Islamic investing approach. However, with Sharia compliant investing, our advisor is there to field questions and audit our funds. If you are interested, maybe we could give you some advice. An independent ESG body could serve the same purpose by advising on ESG products and serving a third-party auditor, which can also be used for risk mitigation. A regulator to look at audit reports to make sure a fund complex is following the rules it sets out for itself. Another important question which we need to address is what makes Islamic finance different from the conventional finance? This is an important issue which we got to understand, which we got to have a better appreciation of before we move any further. Saturna Capital, is the best known provider of Sharia compliant mutual funds in the US. Its Amana fund family includes 4 funds totaling over $5 billion in assets. Their funds follow both Islamic principles and ESG investing principles. They eliminate companies that have operations that do not comply with the teachings of Islam. This includes companies whose business operations charge interest and engage in gambling, tobacco, pork production, alcohol manufacturing, pornography, and weapons manufacturing. While ESG funds are especially popular in Europe and other developed markets, creating a global standard is a slow process. Yeah, simple as that. That is the number one problem which we Islamic financial managers we've been facing. The Maybank study found that 55% of respondents said the launch of a global standard is at least 2 years away from now. Only 52% expect good progress or even dramatic progress within that time frame. So we're still not yet sure whether we will be able to get global standards framework within 2 years time span. It could take more, and most probably it would take a lot more than this time frame. In addition to fund availability, one key reason ESG funds may be more popular than Sharia based funds is due to their fee structure and performance. A fee study by Morningstar found that investors in ESG funds were paying higher fees compared to investors in non-ESG funds. So that's another important element which we got to keep in mind while studying these issues. In terms of performance, it's difficult to make exact comparison between the two groups of funds. One reason is many Sharia compliant funds do not operate in the US and are not based on that country's dollars. However, an examination of the largest US based Sharia compliant funds and ETF found positive performances. The Amana Growth Fund, which is the largest Sharia compliant fund offered in the US, they outperformed the Standard & Poor 500 in 2021 as well as in the past 10 years. The fund returned almost 33% over the past 3 years versus 26% for the Standard & Poor 500 and 18% over the past 10 years versus 16.5% for the Standard & Poor, according to sustain.com. Another quick example could be that AMAGX also has an expense ratio of 0.95%. The largest halal ETF, the Wahid FTSE USA Sharia ETF, also beat the Standard & Poor in both 2020 and 2021. Sustain.com reported the halal ETF has an expense ratio of 0.5%. Now, one thing which we need to understand is just basically at the end of the day, we the humans, not just Muslims, but we the humans are facing a very, very significant challenge to the humanity, and humanity is on the brink of collapsing. Why? Because the environment is being degraded so speedily that we got to do something, otherwise we'll be very late. So, and a lot of companies, especially in the developed world, they seem to be concerned about this issue. So that's why they are focusing very keenly on this important topic. And sustainable investing, to our understanding, is good business. While making investment decisions that include societal benefits is new, of course, is new. In the past, potential investors would not think about this important topic. But for the last 10 to 15 years, it's become a very, very important topic, which has a special place. Investors, they tend to think about it, and of course, all of us reasonable people, we are concerned about the future of humanity, future of the earth, as far as the environment is concerned. It's also clear that companies that practice sustainable investing have improved financial performance as well. So from a financial point of view, from a financial perspective, there's been increasing recognition that ESG, whether it be climate or diversity, actually does affect the value of companies. It's natural that they would want their investment portfolio to take into account those factors. So for our members, this is a basic responsibility to investors. In practice, this means that companies that follow ESG and Islamic finance principles could deliver better returns to investors than those that don't. So you understand what we have talked about, and I hope at least some of you will like it. Basically, today's topic might be boring, might be considered boring for some of the people, for majority of people. Why? Because the thing is that no matter how many number, of course we get large number of visitors on our website and on our Halal Times YouTube channel, but the thing is that most of the people, they're not interested in this very important topic. So it's a very specialized one, and to my understanding, nobody has touched upon this issue in detail. So today it was our first attempt, most probably, and inshallah we hope to bring you a lot of news about this topic, very important topic, which everybody tends to care about these days. So hopefully we will be able to keep on producing good content to enhance our understanding of what needs to be done to improve the odds on the face of the earth. Thank you so much, and inshallah I hope to be able to speak with you very shortly. Thank you so much, and salam alaikum.